You've had 9 years of success after success at Flipkart, and now your first attempt, and then you're returning money.
We took a very bold call to return the money, shut down the business. Somebody is going to incur a loss if you actually don't deliver the returns, right? I just wanted to do the right thing responsibly.
Anil Goteti is the founder of Scapia, which is India's first credit card for travelers. Scapia has raised $72 million till date to target India's Gen Z travelers.
We are able to provide a new age experience that Gen Zs and millennials really love. And then
What's the hard thing about selling credit cards to Indian consumers? Anil, welcome to the Founder Thesis podcast. You run a credit card company. Uh, can we start with understanding what exactly is a credit card and how does it work?
yeah, thanks, Akshay, for having me here. Looking forward to the conversation. Yeah, sure. First, let's start with what a credit card is. So we are in the business of actually building co-branded credit cards with banks. Obviously, we can't on our own issue cards to customers, but we work with banks who have the license and the ability to issue credit cards, and they actually work with our customers to issue cards to them. So, what is a credit card? Uh, I haven't been asked this question for quite some time, but I think it's a good exercise for those who are probably unaware about the cards and what they do. Look, a credit card is a payment instrument, right? It's a payment instrument where you, as a customer, uh, go to a bank and then you can ask the bank for the payment instrument, where the bank verifies who you are, your ability to pay, what you do for a living to be able to pay, and then assesses your credit history and then gives you an unsecured line. What I mean by unsecured is there's no collateral against it. You don't have to put like a home or any other property against it as a security for the credit line that the bank gives you. And they assign a certain limit, like, Akshay, we think you can use a limit of up to, let's say, 2 lakh rupees, right? So that 2 lakh rupees is given as a limit to you on the card, as a payment instrument. And that card then can be used across various outlets of retail or shopping or restaurants, wherever you want to go spend, where instead of paying cash or using your money immediately from your bank account, you can now use this payment instrument, which is the card, where you can tap on the payment devices, which are called the POS machines, where the payment is then authorized and the credit card is tapped or swiped, and money is taken from the credit line that you have been given. Or you can even use it online, like you want to go on a website like an Amazon or a Swiggy or a Zomato, like a food delivery apps, any of these platforms, where while at the time of payment, instead of using your bank account, UPI, debit, you can actually use your credit card to be able to then make the payment. What happens at the back when the credit card is tapped or swiped or the number is punched? There's a whole bunch of things that happen at the back to be able to verify Akshay does have the money. It's an authentic card. It's a genuine payment instrument, and that's verified. And then the payment goes through, where the merchant, or let's say, if it's an online delivery app like a Swiggy or a Zomato, they get the money in a day or two. And you, because you have a credit line as part of the credit card, you get time to be able to pay that back, let's say up to 30 days or 40 days, as whatever is the credit period, which is interest free, to be able to make the payment, right? And if you make the payment on time, it's a credit, there's a free credit period. But you can choose to convert it into an EMI, where you can pay it slowly over 3 months or 6 months or 9 months, because you may not be able to pay immediately. Or if you get delayed and you don't pay on time, then you get charged an interest fee every month, where you'll have to pay interest to the bank. So overall, it's a enabling tool to be able to pay through credit, You don't have to dip into your bank account immediately, but you get a free credit period to be able to make the payment. And then you also get the convenience of carrying a single instrument rather than carrying a lot of cash. It's also a secure instrument because money is not immediately deducted when you make a payment. There is actually interest-free period where money is charged on the card. In case there's a dispute, let's say you made a payment to a merchant, but the merchant did not deliver your services, then you have a little bit of time to be able to contest that disputed before you actually make a payment to the credit card, right? So there's a lot of other benefits to be able to use the cards. One of the other benefits, which actually where we all play and a whole bunch of other companies play, is that the cards also carry rewards. So typically when you just pay cash, you just pay the cash and there's no rewards associated with it, right? So when you use a credit card like ours or several others which are out in the market, you also get rewards for your payments, and that makes it even more attractive in addition to the financial incentives that you get in terms of the credit period or the interest and everything that you get on the credit card payment instrument. So overall, this is a credit card. It obviously is a physical card. There's a physical instrument where it works with certain networks, like there's Visa, there's MasterCard, there's RuPay, which is the Indian network. But you also have a 16-digit number, which is the digital number which you can punch in everywhere and then use it across without even the physical card, right? There's obviously more advances which are happening where today you can store that digital card on your phone and then go tap and pay everywhere without even the physical card. But so the medium and the form factor is evolving. It's both a physical card and the digital card, and primarily though it's a payment instrument that is quite rewarding and gives a lot of benefits to the customers. Yeah, so that's the credit card.
What's the role played by a Visa, MasterCard, RuPay, these networks, or American Express?
Yeah, a good question. Look, networks are the ones which actually stitch the entire payment network coming together. So, see, it's a very complex network, right? Let us say you are the shopkeeper, I am the customer, right? You are sitting somewhere online and you're collecting payments for your products. I am sitting in a different city. Now, I am entering a number which then you need to verify it's a genuine card. Anil has the ability to pay, and when Anil is saying he is going to give you 100 rupees, that 100 rupees is actually something that I am going to be able to receive, right? So there are multiple parties involved here. I work with a bank, like on my side, because I hold a credit card from a certain bank. I have a certain banking partner that has issued my card to me, right? You are the merchant. Now you have a certain bank account for all your acceptance of all the payments. So you have your own bank, right? So that is called the acquiring bank on your side. On my side, it will be called as the issuing bank. Now, your bank may be sitting in a different country. You may be in Japan. I might be in India. And now these two banks need to be able to talk to each other. So the banks then talk to each other through the network. And, it could be a Visa or it could be a MasterCard. Within India, there's obviously RuPay, which actually brings everybody together. Even in the UPI world, the UPI, the National Payment Council of India, Corporation of India actually puts a network together using UPI, right? So the network is the medium through which the merchants and the customers are able to talk, and the banks are able to talk with each other, verify that this customer is genuine, this merchant has been verified, this money has to go from person A to person B or person A to merchant A, and this much amount happened at this time, and it's verified. And once the network comes in, obviously the banks are able to talk and transfer money to each other through the network, right? And then the banks then indirectly work with either the customer on my side or from your side, the bank will work with you as a merchant and then deposit that money to you. And then the bank will collect money from me, right? So, but the network is the medium through which all of this happens. And they bring and stitch everybody together and make sure that this money transfer happens in a seamless way. without fraud, with right acceptance, with right diligence that happens legally, and obviously because it's a service, everybody along the value chain here takes a little bit of money. Yeah, yeah.
Okay, got it. Uh, who are they taking money from? Because as a customer, I'm not paying anything, right? And there's this very popular saying that when you're not paying for your product, then it means you are the product. Who's uh, who's who's paying?
Multiple people pay on the in the value chain, but primarily it's the merchant and the customer, right? The merchant pays for every 100 rupees. There's obviously charges that are levied by the network and decided as to what the merchant has to give as a cut for the 100 rupees. It's the merchant charges that are levied, and the merchant pays. Okay. So that is one part of the value chain where it's monetized and the merchant pays. The customer
And this
may
is
not
called
immediately.
MDR, right? Like,
Yeah, it's called MDR. So it's called the merchant discount rate. And that eventually then, is the money that actually enters the value chain. And then after that, the network takes some part of it. Your bank will take some part of it. The issuer, the customer's bank will take a little bit out of it. So
and someone
then
like Scapia will also get a
we'll
share
take
of
some part
this.
of it from the bank. Then because the merchant is paying, most of that then also gets transferred to the customer as rewards and goes into the reward customer's pocket. Whatever the merchant is able to pay is able to go back to the customers also as rewards. So the customer until that point doesn't pay, but is actually receiving a lot of value in addition to what they are actually paying for the product or the service. The customer pays when they want to convert it into EMI and then pays it slowly, because then they have to pay interest, because then you're also getting a lot of value out of it, right? You're like trying to pay it over 3 months or 6 months versus paying immediately, and there is a time value of money. So if you don't pay money on time, then you have to pay some interest fees, but the customer then pays at that point. uh, there's also customers payments for various um, like fee services. For example, if sometimes I'm availing an EMI, I might have to pay an EMI conversion fee. If I'm canceling the EMI, I might have to pay for the cancellation. If I lost my card, yeah, late fees. Late fees again is similar to me not paying on time. So there's basically interest that I'm paying. It's a form of interest. Sometimes you've lost your card and you need to get a replacement card, then you have to pay for the replacement card. So there is various other fees that the customer has to pay, but primarily customer gets a lot of value through rewards. If the customer is paying everything on time, then they don't accrue any extra charges. Sometimes you have to pay for the card itself. There's a joining fee or an annual fee. In our case, we don't charge either. But sometimes you have to pay for the card itself because the card is giving you a lot of benefits, and you want the customer to be paying for that. And then outside that, there's also a set of services for which the customer pays. So yeah, that's basically how the money flow typically happens. Yeah, yeah.
What do the numbers look like? If there's a 100 rupee transaction, what is the MDR, the merchant discount rate, and how is that split?
That varies a lot. That there's no defined number, right? You'll have to look at what what is the nature of the category. There's a whole bunch of category definitions which are called MCCs and MIDs, which are defined by the network. There's a merchant category code, and every merchant category code has a determined set of charges which are levied by the network. So if it is a rent or a utility, it's something. It's a shopping, it's something else. If it's a travel, it's something else. On restaurants, it's something else. So every category on each of these merchant category codes has a different charge, and it can vary anywhere. Sometimes it's 0.5, 0.7%. Sometimes it can go up to 1.52%. So it's a blend of various charges. So there's no fixed determined charge, and each network has the prerogative to charge whatever rate that they want to also. Yeah.
And how is that split? How's the pie split between different players?
Different players, look, again, there's, every part of the value chain, there is a bit of charges that, everybody takes, whether it's, see, sometimes you're an online merchant, then there's a payment gateway that you use. Then the payment gateway will take a little bit of money, right? This will be, I would say, very, very small amount of charges at every part of the value chain. Most of the money is retained by the issuing bank, which actually is, taking all the risk on behalf of the customer to be able to get the customer to pay on time. And eventually that flows back to the customer. But every part of the value chain, people may make either some 5 bips or 10 bips or 20 bips. Like it depends on various players. I mean, again, there is no like a fixed number that everybody charges. Is again the network, what they can command, and each payment gateway, what they negotiate with each of the merchants, how they can actually bring all of that together. So it again comes down to what each party decides with each other and what those rates are. Yeah.
Who foots the bill for the benefits and the rewards? Like the bank is footing that bill, or they're passing on the margin to you and you're footing the bill?
The bank is the one who actually determines all the rewards and all the benefits for the customer. But obviously, because you're a co-brand card, the bank and us work together, and we craft it together and make sure that the customer has a very good card with a lot of benefits that they can enjoy. So because it's a co-brand, typically if it's not a co-brand where the bank is doing a card on their own, then they decide it unilaterally and say this is what we want to give. But because it's a co-brand card, both of us sit on the discussion table as good business partners and then craft it together and say, let's make this card work for the customer, which will make it quite attractive. Then what is it that the bank is able to foot? What is it that we are able to foot? And then bring it all together and offer it to the customer. So it's like any good business partnership, two parties coming together and making it happen. Yeah.
What's the hard thing about selling credit cards to Indian consumers? For someone who's sitting on the outside, one might feel like everybody wants a credit card, so it shouldn't be hard to sell a card. But I'm sure from the inside, you understand the challenges. So, what are some of those challenges of selling credit cards?
Actually, it's not that easy. You might think that everybody wants a card and, it feels like it's very straightforward to sell the card. Look, you have to come from the consumer angle first, right? You have to see what is the customer going to really like. What is the market looking like? Customer has plenty of options. Like, there's hundreds of cards. When there are hundreds of cards and options, your ability to then sell has to be very, very good from how are you differentiated? What is it that you will cater to? Who is it that you will cater to? What are the benefits that will make it attractive? And hence, what messaging and communication do I want to then put out there, which will then cut through all the noise, and then they're able to hear you very sharply, clearly saying, I am that customer. I find your card very attractive, and I would like to really get your product. But even then, there'll be multiple options, even for that one single product segment or that customer. So it is actually not that easy. It's a very crowded market. There are a lot of options for the customer, multiple banks, multiple co-branded cards with various segments. Customer also is not a unilaterally customer where I'll say I'm a traveler, right? They are probably a traveler, but they also enjoy food. They also are doing shopping. They are also are doing, let's say their grocery, purchases every week and every month. So the customer also is going across segments and has a lot of choices. So you have to be very sharp. You have to figure out what is your product, what is your offering, who is your customer, how is it attractive, how are you going to make it better than anything else out in the market. Give them a very, very good experience. Only then they'll come and take yours. Even when they're coming and taking it, how seamless is the onboarding application process? Are you going to make it a paper application where people have to get it after 1 week or 10 days? Or are you going to make it a 5-10 minute online application where they can go through this very seamlessly and say, okay, your card is approved, not approved, you're eligible for this or not eligible? And then how easy or delightful is it when you receive it, when you start using it, whether the card is being accepted everywhere, what kind of features and benefits you provide on the card. All of that comes together, right? I mean, it's not, people think selling the card is just a one-time affair. I'll just sell the card and then, it's there in the wallet and people will keep using it. But it's actually a continuous service to the customer, right? So the bank and us work very diligently to make sure that the customer enjoys the product on a continuous basis. We keep innovating because we have to retain the right for the card to be in the wallet and continuously used. It's not just selling once and then moving on. So, yeah, it's not that easy to be able to sell a card or any financial instrument or any product in the country to customers. You have to be very, very sharp to be able to get the customers' mind share, and then be able to win their time and affection towards your product. Yeah.
Do you look at, social media companies look at metrics like the DAO, MAU, daily active user, monthly active user, stuff like that? Are those metrics relevant for card companies also?
Yeah, look, uh, we're a card company, but we also are a card company which has travel as our differentiation. And our customers come and redeem their rewards on our travel. And even when they don't have rewards, because they like our travel offering quite a bit, they come and book travel on our platform, right? So what we measure are multiple metrics, right? How many customers do we have? How often are they using the card in terms of the number of transactions? How much are they spending every month? How much are they coming onto the app and using all the features or checking out all the features? How good is our travel and how many times are they traveling per month? How uh, how are they referring others, and how good is the word of mouth, and how organic is it versus we having to scream and people coming? So
How do you measure word of mouth?
we see how many customers are just downloading our app without any advertisement organically.
Okay.
Yeah.
Okay, got
So
it.
all of these, like, some of the metrics, like you mentioned, in terms of DAO, MAU, and all the stuff are also metrics we look at, but they are not the primary metrics. They are probably, I would say, secondary metrics for us. Obviously, if the card is being used a lot, the app is being used often to be able to check the transactions, make the payments. The travel is being used often. Those are all the core metrics, along with the number of customers who are doing all the stuff. But then the DAO, MAU, and all of that are input metrics towards a lot of those business metrics that I mentioned. Yeah, yeah.
Got it, got it. Do you monetize your travel booking service?
We do, obviously. We look at the way our business model is that we work with the bank to be able to give the card, right? Now, the card obviously has its own P&L where we get, income from the transactions. So that is one part of the monetization. That's one part of the P&L. The customer then gets all these rewards, and then when they have these rewards, they keep accumulating it, and then they use it to book travel. Today we have, multiple categories. We have flights on our platform. We have hotels. We have buses. We have trains. We provide travel visa services. We also sell packages, what we call Scapia Unmapped, to customers where they can go on a trip with others, right? Now, these are all the travel offerings that we provide. When a customer comes and makes a travel booking on our platform, we do get some income from being able to sell a certain ticket or a certain package or a certain visa. There are fees that we are able to get as part of selling, that travel service. It's like any commerce income that we get. Now, that is another monetization, and we take that monetization along with the card monetization, combine the P&L, and then because we are able to get both, we are able to then pass on more value to the customer also, and then the customer gets a lot more on the card, and the card becomes a lot more attractive. So it is actually two P&Ls coming together to be able to give more to the customer, and we also being more sustainable because of that. Yeah. Yeah.
What's the moat for a credit card company? Because a lot of things you mentioned, like a seamless application process, this is table stakes, right? I think every bank today offers this seamless
Yeah.
application process, unless it's like a PSU bank or something, but most private
Yeah.
sector banks have that. Uh,
Yeah.
all banks are competing on rewards, although the flavor is different. So what's the moat
Yeah.
really?
No, good question. Good question. Actually, with due respect, I don't think every application right now in the country or all the process in the country are table stakes. Unfortunately, they're supposed to be table stakes. But look, I think if you look at the entire credit card in terms of how the experience is, it's actually highly variable. Today, the application process for many banks and cards is actually very, very tough. I get a lot of emails from our customers every day and every month. In fact, one of the first thing they say is, "What a beautiful, easy application process. Thank you so much." Yeah. Uh, See, when a credit card application you have to go through, there's a lot of stuff that you need to fill because you need to be able to give bank confidence that you're credit worthy, you are who you are. In case you default on a payment, then somebody from the bank can come and do a collection and then come to your doorstep and collect the money. So there's a lot of stuff that you need to do. There is a KYC process, and all of this can look quite daunting, right? I mean, on a paper, you know, people may have somebody fill out for them, then that's easy. But when you're doing it on a mobile application or on a web application, it's not that. It appears to be straightforward, but most people actually don't do it well. And then being able to have the right KYC and checking everything digitally and doing a video KYC, doing it 24/7, all the stuff appears table stakes, but it's not. Okay. Then even after you get the card, ability to see your transactions real time. Today on our card, we have worked with the bank to make sure that when a customer taps the card, as soon as the card is tapped, within a few milliseconds or a second, the transaction appears on the app. So let's say you're abroad. Let's say you're abroad and you are spending in Japan and you want to spend 100 yen. Now, you are earning in rupees, you are paying in rupees. You want to know when I spend 100 yen, how much am I being charged? Now, that confidence of how much am I being charged on 100 yen is not something that everybody gets. Most banks typically send you a statement after 30 days or 45 days and say, this was what you're going to be charged, this was the markup, this was the rate. You don't know what before the rate is. Now, we have taken this problem statement and addressed it head on, where on our app, when you log on, you can actually check today how much is 100 yen and what am I going to be charged before it is tapped. So we give you that level of trust and confidence. Then you take the card and let us say you're in Tokyo and you want to tap and you get charged 100 yen. As soon as you tap 100 yen, real time, you can open your app and see in how many rupees you are charged what. And that number will show up as rupees exactly. And that is what will come on your statement. That is what you will pay in the end. It seems straightforward, but almost all apps and banks in the country today do not show this real-time status and what is the currency and conversion and all this stuff. Now, I'm giving you only one such example of a foreign transaction. Right? Now, take the ability to repay your bill. Right? Today, unfortunately, and it's a shame that most people have to use a third-party app to be able to repay their bills of their credit cards. They unfortunately cannot open their banking app and then pay their bill on there, right? But again, we have invested and made sure that our repayment on our app is extremely seamless and being able to pay as soon as you pay. You don't have to wait for a day or two for the money to settle and all the stuff. You pay, let's say, 100 rupees, 1,000 rupees, 1 lakh, whatever you made, it will reflect immediately on your credit line and it will say payment has been received, right? It should be ideally stable stakes, but unfortunately it is not. And we have invested across the value chain of the credit cards to make it seamless. Even rewards, right? It is extremely non-transparent when, let's say, you spend 1 lakh rupees, you're supposed to get, let's say, 2,000 rupees worth of rewards. How many coins are you receiving? For what transaction are you receiving? For what transaction are you not receiving? How much are you supposed to? And have we given you that? What is your ledger in terms of what was the balance last month? How much are you getting this month? And being able to see that very, very clearly, right? That comes in some statement somewhere. We are able to show it on every transaction as and when you tap, gives a lot of confidence. then the ability to redeem this also. See, banks unfortunately play only on breakage. Breakage means what? Let's say you have 100 loyalty coins, but most likely, if you don't give you a good experience, then you will not end up using it. Only 50 of you will use it. The remaining 50 of you, the coins will expire, and I'll make money because you've not ended up using it. But we have taken a counter view and said we will make it super easy for the customer to be able to redeem what is actually their own money, that 100 coins that they have, or that whatever that is there in their wallet, and very delightfully just press a button, it toggles, and then you can say book your flight, book your hotel, book your train, whatever it is, and redeem. And that delightful experience along with all the value then makes the customer more and more loyal and attracts the customer to using our product, and also then generating a lot of word of mouth for the other. So uh, actually, unfortunately, not only in India, by the way, world over, the experience that people get today in the not only credit cards but even other financial products and services is not that good. And that's where we fintechs come in, and we are able to provide a new age experience that Gen Zs and millennials really love, and then that's what makes them use our product and love it. Yeah.
I guess that's the reason why credit exists, right? Because the customer experience is broken.
Yeah, that's what I was saying. Like, for example, on the repayment side, right? Very few people get the repayment really, really right, and they have built the entire brand over the last 7-8 years, saying, come and repay your bills on our app. So, what you're mentioning is one part of the value chain, but if you look at the entire part of the process, whether it's from application, repayment, seeing the transactions, seeing the rates, seeing the rewards, all of that, every part of it unfortunately is broken. But very diligently we have crafted at every step how we can make it much, 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 much better and ensure the customer has a very good experience. Even our unboxing, how you receive the product, we have taken a lot of time and effort. I'll just show you the unboxing. Look, this is our brand Scapia, right? Um, and if you can see the recording, it says "Go Places." Yeah, so the kind of design and time and effort that you've taken to make sure the customer has a good experience, and this is the card when you unbox, and how the card is designed, right? How it's unboxed. Uh, these are all, things that you're supposed to enjoy, right? You're supposed to use it along, and the customer is paying you or wanting your product, and you make it quite delightful at every part of the step, right? So that's what we spend a lot of time and effort in making sure the customer gets. Yeah, yeah.
Okay, now I understand how you had such. So you had like a 9 million seed and then a 23 million Series A not too long after. So yeah, I can see what the VC funds must have seen. This is pretty impressive. Um, I, I want to also understand what a VC fund would have seen as impressive from the economics of it. Like, what is like the CAC to LTV ratio? I think that's like the golden ratio for a VC fund to look at, right? So typically, what does the CAC look like and CAC, like customer acquisition cost? So in this credit card space, what is
Yeah.
typically CAC? Does it vary from
Yeah.
one player to the other, or it's
It does
similar
vary. It does
across
vary
the
from one bank
industry?
to the other. See, you have to think of it this way as to uh, what you're asking is actually the most pertinent question, right? How much money are you spending to be able to acquire every customer? And then how much money are you then able to get from every customer through the lifetime of them being with you, right? Now, the CAC, the customer acquisition cost, which is a number, is an outcome. Most people think it's actually an input as how much money that you need to spend to acquire the customer. But it's actually counterintuitive. If you build a very good product, if you make it very, very attractive, if Akshay as a customer loves it so much that he'll go tell his friend that, oh my God, I downloaded Scapia, I loved it so much, but let me go get my friend. then the CAC becomes an output metric. Why? Because your product is leading your marketing, your design is doing a lot of the marketing, your customer service is doing all the marketing, your whole product and the entire company is then driving your CAC down, right? Obviously, you also need to make noise and shout and say, "Hello, I am Scapia. You may not have heard about me, but this is who I am, and this is what we offer, and we would love for you to try our product." But that's the second part of it. The primary way to actually build a brand and a product is actually through what you put out there. Then it's about how much you scream, what you scream, and how much brand money you spend. So the CAC is an outcome, is an output based on what you do, and the number varies. And the better your product is, the CAC comes down, right? Now, that is the CAC part of it. Now, to your question on the LTV part of it, LTV again is an outcome of how loyal is the customer and how much are they using your product throughout, right? This is solely determined by how good is your product, how good is your customer service, and how much are you able to make the customer enjoy your product and continuously use it throughout the lifetime. So that is where we spend a lot of time on, right? For example, on the card, we've not stopped with some of the, we are the only card in the country where in addition to customers actually using the lounge, we also give the customer the ability to go to any restaurant or any outlet at the airport across 99 airports to tap their card and get money back in the form of coins for what they're spending at the airport instead of going to a lounge. So I might go to the lounge just for free food, but today the lounges are getting crowded, long lines, sometimes they're even messy. I might actually go with a family member and they may not have lounge access, but the two of us can go to a nice restaurant, sit down, order. But as soon as I tap the card, then I get money back in the form of coins. Then my meal is paid for. And my purpose of having gone to the lounge is also served by that, right? So, but sometimes you may not want to go eat because I might going onto a flight, or I might have come from home and my mother may have given me good food and I don't want to eat food. Then I might use this benefit now to go buy some gift for a loved one wherever trip I'm going and then buy that, right? So this is an innovation. We call it airport privileges. This is what brings more and more loyalty. Now, when we launched the card, we had only flights and hotels. But over the course of the last year, we have now added 4 more categories. Why? Because the customer now has more choice for the card. So all of these, as we keep doing more and more innovations, more and more product launches, the customer has more and more reasons for them to use our product, and that is how the LTV keeps increasing, right? So the CAC and the LTV are outcomes of all the inputs that you do on all of these things. So this is what any investor would see, or me as a founder, to be able to build a responsible business, I have to look at these and make sure that they are healthy. And you build a good, delightful product that customers love, and that eventually will lead to good, low-cost acquisition and high retention with loyalty. So again, as simple as it sounds, but you have to make sure all of this happens and it comes together. Yeah.
Let's say someone like a Bajaj, which I think would probably be one of the largest issuers of cards. How much would their CAC be?
Bajaj, I think that card has been stopped recently. I don't think they do any more co-branded cards, if I'm not wrong. But look, I think it all varies. But I think banks typically spend 3,000 to 3,500 rupees per card per customer when they acquire them.
And this cost is the sum of digital marketing plus sales.
All put together. It could be sales, it could be digital marketing, it could be all of it put together. Yeah.
Okay.
Yeah.
So what you're saying is that you don't look at CAC as the right metric. It's an outcome because even customer service is contributing to CAC in a way.
Yeah. But I'm not saying it's not the right metric. I'm just saying it's a metric that is determined by a lot of things. People unfortunately just look at CAC as a single number, that is how much am I spending to acquire the customer. But these are all intertwined. How much am I spending on design and product also determines your CAC. Yeah, yeah, yeah.
And what's your CAC like compared to that 3,000, three and a half
I,
thousand of
I,
a
I
bank? It's
it's a
lower, I
number that I
assume.
don't. Yeah, it is lower, but we don't disclose it anywhere publicly.
Significantly lower.
It is lower. Yeah, it is lower. But again,
Okay.
we do like I'd rather spend more on giving value back to the customer in terms of rewards and the benefits, and then giving a lot of value there. So then that drives the CAC down versus spending a lot of CAC versus not giving value to the customer. So it's again, all of these are trade-offs. Yeah, yeah.
Right. Right. Fascinating. And typically, what's the long-term value of a card customer
See, typically
in the
customers,
industry? Like, yeah.
see, typically the customers keep a card for a very long time. See, nobody likes to switch these things. Like, I mean, you've taken a lot of effort filling an application form, you've gotten a product, and then it is in your wallet. So most customers typically retain a card from anywhere 6 to 8 years or 9 years. And so the lifetime value of the card can be quite high. But again, that number is shrinking, that period is shrinking. Customers are getting a lot more choice. There's a lot more awareness, and there's a lot of new innovation coming. So you cannot take that for granted. You will have to make sure that you're able to retain customers for as long as possible. Like before, for example, you know, some of the devices and all the stuff people would retain for many years, right? Like whether it was a TV or a fridge and all the stuff, people would keep that for 10, 20 years. Now people are changing every TV for every 4 years or 5 years, right? Mobile phones are changing every 2 years. So the cards also will see some shrinking in terms of how often they'll change. So it'll come down to what are you offering that can keep them continuously hooked and be able to use it. So yeah, we're quite early in our journey, but I think we're quite confident given our rate of innovation and what we're putting out there that we'll be able to retain the customers for a long time. But of course, we want to make sure we don't take it for granted, and we we rather earn that loyalty rather than just take it for granted. Yeah, yeah,
Yeah, okay.
yeah.
But I'm still trying to kind of pin down a number here. Like, what's the typical,
I
and
I
you don't have to tell me for your company, but
I
in general, for the industry.
See, typically, let me put it this way. Typically, most cards would break even in about 3 years or so after the customer is
Wow,
acquired. So now you
that's
can do the
fairly
math.
long.
Yeah,
I
that's
did
very
not
long. You
expect
have to
it to
be
be so
patient.
long.
Yeah, you have to
Oh,
be
wow.
patient. You cannot expect the card to break even so quickly. So it takes some time. Like sometimes it can be as low as 2 years, but getting break even so early is not that easy. So it's an investment. Most people don't realize this, but getting a customer to come and use your product is an investment, and that payback happens after several years. And you don't get the full reward of it unless the customer stays with you for 5, 7, 8 years or so. Yeah. So that has to play out. So you'll have to make sure that you are able to retain the customer for so long. Yeah. Yeah.
Okay. You were speaking of the airport, like a reimbursement, like in a way the coins coming back. So you put the entire bill?
Yeah, up to a certain value. We up to about 1,000 rupees worth of the bill we do foot. So the customer goes to the restaurant and let's say they have a 800 rupee meal. Let's say a couple of masala dosas. Let's say a couple of masala dosas, then and a coffee, everything put together 800 rupees. Then that 800 rupee, as soon as you tap. So what we have done is on the app, you open the app, we know that you're at the Bangalore airport, so that there's no fraud, right? So we are able to check. And if you booked a flight ticket through us, that we're able to read the boarding pass and that you're going from Bangalore to Delhi at this time of the day, at this time of the hour. And you choose which restaurant are you going to go have your meal. As soon as you tap at that restaurant, 800 rupees worth of coins will come back to you immediately to your wallet. Yeah. So that's what you call
Does the
airport
merchant
privileges.
subsidize this, or like this is entirely paid by you at the bank?
No, we and the bank are doing it at this point. We are of course working with some merchants where we are able to get a little bit more benefit to the customers. but most of it we are funding right now. Yeah, yeah.
Okay. And how do you stitch together the reward program? Like, uh, are there aggregators to whom you can go and they can stitch together a reward program for you, or you have to go lounge by lounge? And how does that happen?
Look, a lot of it is changing. See, reward programs, obviously, what we offer as rewards primarily is actually our coins and our loyalty, right? Currency. So for the customer, every transaction that they tap, they earn some loyalty coins, and that is something that we have put together. It's our loyalty program working with the bank, and then we have put together an entire travel platform, fully ground up ourselves across all of these categories. You, of course, can use aggregators for any of this stuff, right? Banks do, and banks work with a whole bunch of reward partners and all of that stuff. But typically, those where the experience breaks and becomes a mess, because once you hand over from one party to another party to another party, the experience is not as seamless. So we have actually built this ground up and built it in house so that we are able to offer the customer a seamless experience. We have tied up with all the lounges directly and working with all of them. Again, there are aggregators, but we go directly to all of the lounge operators and then able to stitch everything together, right? So we work with our network partners and the bank, and then we offer a zero Forex markup on our card as well. So uh, different players take different approaches, but think of us as a unique player where we like to do all of these ourselves because we are able to make the customer experience a lot better. Because we are able to do it ourselves, also, we capture more on the value chain, and we are able to give back more value to the customer also. So, yeah.
So
Yeah.
the travel portal, I know for flights, like there is this Amadeus, Galileo, you can, so it's not that hard to sell flight tickets. But for
Yeah.
hotels, do you have
Yeah.
to
Yeah.
go and
Yeah.
tie
So
up
we
with a
work with,
Hyatt and
yeah,
a
yeah,
Taj and
yeah.
a,
So, yeah.
okay.
In fact, even flights is not that easy. Like, I mean, it's like selling domestic flights may be easy, but getting all the international flights, giving them the various options, various fare families, what is the cancellation, reschedule. Look, in travel, to be able to serve the customer when everything is going right is actually quite easy. But what is much harder is when something goes wrong during travel, before travel, after you come back, whatever it is.
Yeah,
That's
you
when you
missed
will
your
get,
flight or flight delayed.
yeah, exactly. That is when you will get tested as a brand. At that point, whether you have all the right connections and the right integrations and the right ability to service and make sure you can take care of the customer and make sure they are able to service them well, is what really matters, right? That is where trust actually gets tested. Uh, it's easy to issue a ticket, but it's tougher to take care of the thing when something bad happens. So again, we work with multiple operators directly across all of these categories. Like, for trains, for example, we work with IRCTC directly, right? With buses, we work with, hundreds of operators. And for hotels, a lot of chains. And, obviously we do use some intermediaries from time to time to be able to get some aggregation going, because it's quite impossible to work with, every single
The
hotelier.
long tail. Yeah,
Yeah,
yeah.
the long tail and all the stuff. But so we do aggregate supply. We work, we do have supply teams that work with all of these merchants across in the travel value chain and bring that offering to the customer. Like, for
So
example, our
you
travel
are
visas.
like a
Yeah.
full-fledged travel tech, not just a fintech.
Yes, we are both a travel platform and a fintech. So we call ourselves a travel fintech. We're quite unique. From the beginning of the company, we have been building both ground up and making it come together. For example, on visas, right? We have built now the expertise for us to be able to tell the customer, if you have to go to Tanzania or if you have to go to Japan, what are the visa documents? What do you need to apply? When do you need to apply? How do you need to do that? We have gone deep now. For example, to take a photo, we'll take a selfie through the app, and then that will get converted automatically to a passport photo of the requirement of that country and the embassy. You just take a scan of the passport, it will read all the information and fill the form. Then an agent will work with the customer to get the full form submitted, filled and submitted, verified. And then we've also tied up with, one of the most, I would say, trusted delivery and pickup partner for passports, where they come to your house, pick up the passport, submit it to the consulate, then also deliver it back. The only time you might have to move is if you have to do some fingerprints or thumb, some biometrics, which a consulate will ask in certain situations. So we have gone that deep and built that expertise now to be able to deliver. We don't use third parties because we want to be able to serve the customer fully well ourselves. So that's how deep we go. Yeah, yeah.
Why don't you open this up as a a service for everyone? Like I would love to use this.
We would love for a lot of folks to continue using it. At this point, look, we want to only offer this as a privilege to our co-branded card customers. We want the customers to come and get our card, and then they use the card on a regular basis. Then they also accrue a lot of value, right? Because they're using the card, they're collecting the points. Then their travel becomes even more cheaper, right? We want to
But you don't think
keep.
this could be a third PNL for you, like a travel
It, it's
portal?
already a second PNL.
Or,
It's already a second PNL.
right,
Yeah.
right.
Look, at this point, we want to be focused as a company to be able to uh, get the customers to enjoy our card and then use that for travel. Building a travel business independently and then screaming about it and getting customers to come to it directly is a
You're
is a very
fighting too many
different
battles.
business. It's a different
Yeah.
business, and it's a different battle, like you said. Uh, it's important to be sharp and fight, only battles that you can potentially win, right? So even winning this kind of a battle itself is quite hard, right? So rather be focused and do well at it. Yeah, yeah,
Mm.
yeah.
What's the GMV of your travel business?
We don't disclose this metric. Let's just say,
Okay.
I know you're asking all the right
No, that's
questions.
okay.
I'm sorry, I'm not revealing a lot of this stuff.
That's okay.
At
That's
some
okay.
point when we go public, all of this stuff will be available to people. But let's just say that um, we are growing, 20 to 30% month on month, which is a
Wow.
which is a
Fascinating.
phenomenal
That's
metric. That's
yep,
that's
yep, yep.
that's quite good growth, and whether it's our cards and spends and travel in terms of each of the categories. Look, there are many players in the travel industry in India where they have built some categories or the other. I'm quite proud to say that in the last 3 years, we have built a whole suite, and each of the categories is doing well from the customer base, whether it's the flights, whether it's hotels, whether it's buses, trains, visas, all of them are seeing good traction. Of course, different customers want different modes of transport or travel, right? I mean, I might be a regular train customer, let's say when I'm going from Bangalore to Chennai. But when I'm going from Bangalore to Delhi, I might take a flight, right? Or if I'm not getting the train because I've not thought about it well in advance, I might take an overnight bus, right? For a corporate trip, I might choose a certain type of a hotel in a city, but when a leisure trip with my family, I might spend a little bit more and go to a resort. So you need to be able to serve the customer for their various needs. And, in just 3 years, we have been able to build out this entire suite in the country. And there are very few OTAs in the country which have built out this level of depth and breadth in the travel offerings. Yeah. And we're not stopping, by the way. In a couple of months, we're going to launch two more categories. We're going to continuously launch more and more for the customer to be able to continue to enjoy our product. Yeah, yeah,
So this Visa is a paid service, like the visa facilitation.
yeah. It's a paid service. The customer pays obviously a certain fee which goes to the consulate, but we also charge a certain convenience fee for the customer to be able to avail the service. I mean, I genuinely believe that when you're doing something valuable for the customer will be happy to pay for that because they also seeing that the platform is doing some good work for them, right? So we do charge a nominal fee. We don't charge too much, but we charge a nominal fee for some of these services. Yeah, yeah.
The Forex markup, like when you're spending in other countries, does that add to your P&L or that's only with the bank? Like the bank would typically, while converting.
Our card actually has a zero Forex markup. We do not charge any markup for the customer when they are actually tapping the card abroad. So neither the bank nor us is actually earning any money. The customer actually saves a lot of value by not having to pay for a markup. Markup is a big pain point, and customers hate paying that markup. So we,
Because it's not transparent and you don't know what
yeah,
it is.
and yeah, and also why charge a markup for somebody using your product on something like this, right? So we are one of the few products which in the country which also offers zero forex markup, and people are using it abroad. Yeah, yeah,
Okay,
yeah,
amazing.
yeah,
Why do you
yeah,
call it Scapia?
yeah.
It's
Look,
not an easy name.
it's actually an easy name. Look, the root is
Okay.
escape. The root is escape. We wanted to
Okay.
the we wanted to build on something travel, and look, everybody wants a break and wants to travel, and we were looking for words that denote travel. Escape was the root, and we were looking for various, I would say, words which sound similar but not necessarily the same. So Scapia is something that I didn't like, and I dropped the E, added an A, found the domain, and now I think a lot of the Indian customers know our brand and know the word. Yeah, so yeah. So I think there's some folks are confused whether to call it Scapia or Scapia, and it's
Yeah,
like
yeah,
some
yeah, yeah, yeah.
fun game that happens sometimes. But yeah, the word is Scapia, and that's what it is. Yeah, yeah, yeah.
Okay. Take me back to starting off Scapia. So you were already running a venture prior to that, and before that also
Yeah,
you've worked in Flipkart
yeah,
for a fairly long
yeah,
time.
yeah,
What's
yeah,
been your
yeah.
journey? Just take me through that.
Look, Akshay, I've always wanted to be an entrepreneur. I mean, not many people know this, but when I was in college, I studied in IIT Madras. I started I started a venture during, this was the dot-com period. Uh, Bunch of friends coming together, started a company, and obviously didn't go anywhere, but or shut it down. But it's good learning, right? As a kid, as a student, you're trying to do some startups and all of that stuff. That was that. This was before even startups became startups, right? I'm talking about 2001 or something like that, right? Um, then yeah, like when I was working in my first job at Qualcomm, again I started another non-profit because I wanted to give back to India while living in the US, and a bunch of us came together, and over 2-3 years we actually raised a lot of money in the US and sent back money to schools and for education and healthcare in India. We did that, but then with family life and everything became busy, so all of us decided, okay, we'll continue this non-profit a little bit later. Then I did business school, and during business school, again I started another company where iPad had just come, and we started a music magazine for the iPad. In fact, our app was featured by Apple all over Chicago, and these days something
Wow.
like that happens, you'll receive a lot of funding, but uh,
Yeah, 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 yeah.
but again, these are all, as students, you do like I always had the entrepreneur in me, I would say, to start something, build something, and put it in the hands of millions of customers. I've always had that desire. But I thought the best way after business school to be able to learn how to do all the stuff was to join a company like Flipkart, which is one of the, I would say, the um, one of the first companies in India which actually inspired multiple folks to become entrepreneurs, right? Today, I can proudly say that any B2C company you take in India, there will be some flipster there doing something, because we've all had our upbringing and learning in that ecosystem of how to build at scale B2C brands and companies offering those services.
Yeah,
Right
you're
now,
part of the Flipkart mafia. That
yeah, if
term
you were
is
to use that
used
phrase,
for.
yes, yeah, yeah.
Yeah.
And I'll tell you why all of us also had a lot of that upbringing. See, when we all started and we worked in Flipkart at that time, there was no cloud. Flipkart had to build a cloud. There was no payment gateway services just coming up. There was no supply chain. You had to build the supply chain and everything yourself. There were no e-commerce category managers in the market. We all had to learn category management on our own. There was no defined way to build product. We were learning. So when you are in an ambiguous environment where nothing is defined, you learn how to deal with ambiguity and solve the problem and build things ground up. So you build that skill, right? So I actually thought I'll stay in Flipkart for 2-3 years and become an entrepreneur, but the journey was so good. I stayed there for 8-9 years, learned a lot of things, handled a lot of scale, handled some large teams, helped with a bunch of
I think for
fundraisers.
a large part of your career, you were in like a category management role, right?
I think the initial part of my career, I was in category management.
First three,
Then I
4 years.
became
So what
yeah.
does a category manager do? Like, I'm just curious about the role of a category manager in an
let's say you're
e-commerce company.
my first job was to be a category manager for the books category, right? So when you're the books category manager, you become responsible for selling books on the platform. So that means what? You're ensuring that you have all the supply of books, working with all the publishers and the distributors, bringing every book in the world out there to be listed with the right catalog, with the right quality, put it out there, making sure you have the right stock, the right pricing, with the right merchandising and marketing to be able to then grow the business and take it up, right? I mean, as simple as it sounds, but you have to bring all of that and make it happen, right? So that's what a category manager does. Then from there,
I can see that DNA in how you built Scapia, huh? The like stitching together supply across everything, bringing multiple
I-
offerings to the platform, merchandising,
yeah,
like all of this is what you've done at Scapia also, right?
yeah,
The
yeah,
same
yeah,
DNA.
yeah, yeah. Yeah. So because look, I mean, your experience matters, right? So to be able to build a commerce platform, I am leveraging a lot of my experience into doing some of this stuff. Yeah. Then the second half of my time at Flipkart, I actually became the general manager of our marketplace business and product, where I was responsible across categories to work with sellers to bring their products, list it, get them to price it right, help them ship and deliver the product to the customer. So played a played a big role in shaping our marketplace for several years, which is a very enjoyable role. I loved it a lot because not dealing with only one category, one type of seller all over the country is a wonderful role where I believe I played a decent part in helping the company grow and the seller ecosystem grow. Then the
You
last
were
couple of years
leading their used the refurbished platform, right? Too good that
that was
used
a
products.
that was during my marketplace towards the end. We started some used marketplace parts of it as well to be able to get the customer to buy refurbished products. We did launch some of that stuff.
So
Unfortunately,
why
it
did
didn't
that
go
find
anywhere.
PMF?
Yeah.
Yeah, I was curious about that. Like, why it didn't find PMF?
Actually, I did find PMF, but unfortunately, to get the trusted quality of supply at scale is not easy in the country. Yeah, because demand is there, but supply is very, very hard. It's still an unsolved problem in the country, by the way. If any entrepreneur has an interest in building it, there's an open opportunity. Then yeah, last couple of years at Flipkart, I ran all of Flipkart's, I would say, consumer journey from brand marketing, acquiring the customer, getting them to shop across categories, what you list on the homepage, merchandising, marketing, running some of the biggest events like Big Billion Days, and also running the ads business. So monetizing the customer through the ads business. So uh, yeah, so ran the entire, I would say, marketing and growth part of it for a couple of years. Yeah. I think right before the pandemic, I had decided I wanted to leave and become an entrepreneur. I learned quite a bit, but I thought if I didn't put it to use as an entrepreneur now, then I'm not doing justice to myself. So that's when I decided, and I quit in November 2020 to start a company to help, I would say, SMEs and entrepreneurs around the globe to build their business and create their service offerings, collect payments from all their customers, and provide services of the internet. Did that for less than a year, I would say.
That
I
sounds
realized,
fairly vague. Like,
yeah,
I mean, that's like you're doing everything for your customer. Like,
it was
there must have been a
actually, think of it like a Shopify for SMEs and entrepreneurs to be able to uh, list their offerings, sell them, get their customer to pay for the offering on the internet, even scheduling. It's like a full suite of business tools for the SME to run their business. Yeah,
And
but
online commerce, like to run it through online commerce, or what? Like,
it was a software suite for them to be able to. Let's say you're a doctor, or let's say you're a um, therapist, physiotherapist, right? And you want to put your business out there. You want to be able to provide slots and calendaring services. You want to be able to collect payments. You want to be able to market yourself on social media. You want to file your taxes. So, but there's no software out there as an individual, as an SME, to be able to run your business and do all of this stuff. So that's the suite we are building. Uh, but like, look, we raised money, and what I
how much did
realized
you
quickly
raise?
is that we raised about 9 million. Yeah.
Wow.
Uh,
Okay.
yeah. So we did raise good money, and we had a good team, but we were not getting the PMF, and we were not going in the right direction. We were competing in the world stage, trying to sell to customers in the US, sitting out of India, because that's where the market largely is. In India, the market is still not as mature and as not as big. But very quickly we realized that my muscles are all India B2C. Uh, so I wanted to play to my strengths, and it is not very standard even now, but we took a very bold call to uh, return the money, shut down the business, and then I would say keep our credibility and save investors money. See, look, at the end of it, money, people think it's just money at the end of it, but it is somebody's hard earned investment, right? In the sense, investors themselves raise from other investors. Those investors then raise it from some family somewhere. So somebody is going to incur a loss if you actually don't deliver the returns, right? So for me, I just wanted to do the right thing responsibly. If I was not able to make it happen, if I knew that it was not going to happen, then how can I rally a team to make it happen, right? So took a break for 3 months.
This
Spent a
Was it that you were trying to do too much in that? Like, that just sounds like trying to boil the ocean.
It uh, actually, that's a fair point. One was actually were we trying to do too much and we could have been sharper. Two, were we the right people to be able to deliver something like this? Or people from a software background, or people who have those SaaS muscles or B2B muscles to be able to do it, right? So all of this needs to come together, right? And you can obviously learn, and you can be successful even if you don't have those skills. But
So,
for me,
I want to ask you a little on the personal side. Like, you've had 9 years of success after success at Flipkart, and
yeah,
now your
yeah,
first attempt, and then you're returning money. Uh,
yeah.
it must have like really hit the ego, and like uh, like to taste failure after such a long string of unbroken
you
successes, and
you need to
that
have
feeling of embarrassment, shame.
you need to have ego to have for it to hit you first, no? So, but but
No, but
but
that shame,
on a serious note,
embarrassment, like,
on a serious note, it is quite grounding. It is quite uh, humbling uh, to come from a pedestal of having tasted success as a senior vice president on a platform like Flipkart, and then after that saying, you know what, I'm shutting down my company and I'm returning money. Um, some of the things that you mentioned are some of the reasons why people don't do it. In the sense, I'm
yeah,
afraid of how
yeah,
people will think of me.
absolutely.
How am I going to
The
be
shame of it
perceived?
just sounds like,
Yeah,
yeah.
like, how are people going to perceive me? How are people going to think about me? Like, am I going to be considered a failure? Is anybody going to fund me? But you know what? These are exactly the reasons why investors will back you again, because you decided to do the right thing, because you decided to take the right call. Because when you're running a business, you have to be very objective in some of these decisions, right? So tomorrow they trust you with money even more. So when I restarted and then I started Scapia, uh, I went back to my previous investors first as an informal right of refusal first. Like, as in, they were the ones who backed me previously. So I didn't go to other investors first. And they all decided to back me. Right. In fact,
At the idea stage, or you already had a bank tie-up and all that in place? When did
it
you
was still
raise
idea
the?
stage. So
Wow.
actually, I did it slightly differently. The first 6 months, I bootstrapped it. I didn't want to raise money until I got personally more and more confidence. So I was paying employees out of my own pocket, and it was getting bigger and bigger. Then I realized at some point, I think I need more money than just using my personal wealth. I had not made that much money
How did
to be
you
able to fund.
stitch a bank partnership bootstrapped? I mean, like, I'm
I,
assuming banks would want that comfort that you are funded and there is
you're
money in
right.
the bank,
Look,
etc.
some of my credibility in the past helped for the banks to get some confidence that I'm not like running alone on some of this stuff. Uh, but yeah, I did realize that we needed money to be able to give banks more confidence, and at that time I did pull the trigger. But banks did not explicitly ask for it, but they were going to ask for some of that in the coming months, and I preempted some of that, knowing that it's going to come my way. But you need to have a strong balance sheet. You're right. Yeah, without a strong balance sheet, people will be afraid of partnering with you. So,
What did
in
you
fact,
do in those 9 months? You said like 6 months you bootstrap.
mm,
What did you like start selling credit cards through the bank partnership,
no,
or what was
no,
then?
no. Where,
What were
where
you
there was no
doing then?
credit card. We took 1.5 years
Exactly.
to build the card and actually sell it. So the first look, we spent a lot of time in the first 2-3 months just doing user research, talking to customers, uh, hiring the right people, bringing them on board, stitching together the partnerships, building the product. I mean, it takes a lot of time and effort and investment. Like, you want to start a factory, you can't say I'll start selling things in the factory from day one. You have to build the factory, you have to bring the people, you have to build the raw materials, you have to start figuring out the distribution, the marketing, how should your brand be, how are you going to sell it. All of this takes time and effort. And actually, many entrepreneurs these days feel it's very easy. Let me just start putting out a product, and within 1 month, let me start selling. That's the worst way to build a company, I believe. Right? You have to think through things. You have to think about what will succeed, what will not succeed. Do some research. Do some little bit of trial and error in a small way, figuring out what will work, what will not, and then when you're ready, you go out to the bank and then like just scream loudly, right? So the first
Can
one and
you
a half
take me through
years
the
we just built.
sequence that
Yeah.
that in that 1.5 years? What was the sequence? Like, did you build sales or like marketing side first, or did you build rewards, or did you build
No,
the travel tech?
no,
Like, what was the
no.
sequence?
So we had two teams set up. The first one team always was working on building the travel side. One team was working on building the card side.
You
Since
knew
day
travel
one,
right from day zero that
right from
it's
day
a
zero,
travel focused card.
this was it.
Okay.
I didn't start the company until I had a good idea, which I thought would succeed. So, but I just
You
refined
saw
it
that as a
further.
white space, that there is no travel focused
Yeah,
card, and India
yeah,
needs a travel
yeah. But
focused
we
card.
kept refining it with research. Like, that's a very broad statement to say India needs a card with travel rewards, right? But what exactly goes in? What rewards? How are you going to construct it? How are you going to build it? What is the exact numbers in terms of how much reward? What are you going to charge for it? All this stuff is a lot of detail, right? So, like, one team was just focusing on building travel. Even that, I realized I wanted to have two categories to start with. So instead of just launching with flights or something, I wanted a little bit of choice. So we built both flights and hotels from day one. And in fact, in 12 months, first we started testing flights with 500 customers without a card. Just book flights with us and just give us confidence. And we'll keep refining the product. Then 3 months after that, we put out hotels. That was the 15th month we put out hotels, and we got customers to test out our hotels. By the 18th month, we got our card live with the bank, because getting a product live with the bank is a lot of compliance, regulation, everything you need to do to make sure that the card works. It has that work with Visa and then the network to make sure all the merchants around the globe accept it. So, in fact, the first test card we put out in March 23, and then the public launch happened in June 23. So then we put out the product with two categories and the card with certain set of benefits, and that's when we started. So there's a long journey to a lot of this building. Yeah, yeah, yeah.
When did you launch the card?
June 23. Yeah.
June 23. And how many
Yeah.
cards in circulation today?
We don't disclose that, but we do we have several lakhs of customers in the country, and look, we are quite confident that in the next several years we'll have several millions of customers, and I think we're growing at a rapid pace, and I think the love that the customers have for our product and the pull that we have, uh, we also are getting multiple bank partners coming in, and we'll be announcing them in the coming months. We uh, are expanding the number of categories, and India is a very large market, and it's quite underpenetrated when it comes to credit cards. So there's a lot of tailwind there. There's also a lot of underpenetration in travel. There's a lot of tailwind there in travel as well. So both coming together, uh, I'm I'm quite confident that they'll give us a lot of good growth for us in the coming years. Yeah.
Um, you know, isn't card like it's like a 70, 80-year-old product, right? I think Visa,
It is
MasterCard must
a
be Indian. So,
yeah. It's
I
not.
mean,
It's like
why do you? I feel like cards are like landlines, to be honest. Like,
yeah,
compared to UPI and,
yeah,
these
yeah,
more modern payment
yeah,
rails.
yeah, yeah,
And like India skipped the landline generation and straight away went to mobile.
yeah,
So,
yeah.
don't you see that as a risk that India will skip
No,
the
see,
card?
we are not just a physical card. We're also a digital card, right? We've also created a RuPay variant where that can be used over the UPI network. So we have created an offering where the customer can just scan using UPI, but they don't have to pay through debit, but it goes onto their RuPay card. Then they are able to see the statement online on the phone and then be able to pay the bill. Those who want the physical card have it in their wallet, but we the full digital variant where it's working or UPI and all of the machines and all the stuff is also all there. So we are not sitting idle and living only in the past. We are adapting and actually innovating the future, where, like you said, the form of the card will keep changing, but the essence of the payment instrument will still remain. And how you adapt to that will determine how sustainable you are as a company and how attractive you are as a company for the customer. So, uh, so the card is a notional word. It's not just a physical card, right? You have to think of a card as a payment instrument. Yeah. Tomorrow that might evolve into a simple credit line on UPI, right? But that's what will be the card of the future. Yeah. So, yeah.
Are you planning a UPI play, like having a proper UPI app with
Yeah.
like the
We
whole
are going to
bank?
be live.
Okay, that's.
We are going to be live in a month or two on with our own UPI as well. Yeah.
But this is only open to Scapia cardholders. Like it's a closed
At this point,
ecosystem.
right now it's a closed ecosystem. So, but yeah, at some point, we might open some other stuff, but not in the immediate future. Yeah.
Okay. You had mentioned earlier that you'll share the numbers when you go public. So is that the end goal, to go public?
No, that's not the end goal. Those are all again milestones, right? I mean, look,
Okay.
the company and the brand hopefully will be running in the country for several centuries around the globe, maybe hopefully, and expand. And IPO is not an end goal. IPO is just a milestone. It's an important milestone. It's a good milestone, but those will all happen, and we are too early also to be thinking about IPO and all this stuff. So that will happen at some point. Yeah. But those are all milestones. Those are all again
Do you have a
input.
year in mind, like
Yeah.
by which year you want to go public?
No. Too early to be thinking about
Okay.
all that stuff. Yeah. Too early. I mean, they're very, very early. We have just raised a Series B. We're growing, and uh, at the right time we will do all of that. Yeah.
I want to end with understanding a bit about how you manage people, how you built the org, and I'm sure there must have been influences from Flipkart in terms of how the org is structured, built, how
Yeah.
people are managed, how
Yeah.
you
Yeah.
hire, how
Yeah.
you select
Yeah.
people. Help me
Yeah.
understand a bit on your people
Yeah.
philosophy.
Look, one of the most important things that I think about when it comes to people is authenticity, as to how authentic are you with them on what the company is about, what the company's vision and aspirations are, who you are as a leader, how authentic are you, what you plan to do for them, right? That is one very important dimension to how I think about leadership and people. Second thing is, I personally believe that if people are learning, they'll be happy, right? I've always believed that with when a company is growing, it's scaling. With scale comes newer problems, and newer problems gives newer challenges, and newer challenges always gives you newer learning as you're trying to solve them, right? Uh, so, are you creating the right learning atmosphere in the company to be able to challenge individuals and push them beyond their comfort zone so that they are having a good time solving those and feeling satisfied and contributing? And it might be functional learning. I might be a better finance manager and I'm learning a lot, or I might be learning better as a manager, managing more people, or I might be becoming better going outside of my domain and learning something new which I've not learned. So it could be any form of learning, but some of them actually come to learn how to be entrepreneurs, like that, like how I was in Flipkart, right? So, different people, different learning needs, but primarily, if you're able to build a good culture where people are having fun, being authentic, learning a lot, everything else will fall into place. I mean, I'm making it quite simple, but it is sometimes some of these simple things actually yield the best results. Then you build a team around it, right? Obviously there's a certain business, right? So I'm in the business of co-branded credit cards, but I'm also in the business of travel. So then you bring in experts on each of these. Then you bring in HR experts. You bring in brand marketing experts because you're a consumer brand. You want to be able to bring marketeers and talk. You need obviously finance function for any business to work very, very well, right? Then you need people in HR for talent acquisition, for talent development, right? So to be able to think about rewards and benefits, and you need engineers to build the product. You need designers to be able to bring all of this stuff. So you need to think through structurally, and I'll give a lot of credit to Flipkart and my time there to be able to think through, because I've also run various functions as to what all does the company need, what functions do I need, who do I need for each of these, that to be able to bring those people in and then empower them. Look, I think most people know what they need to do. Okay. If you are able to, as a company, give them the time, resources, and the freedom, and from time to time, they may need some strategic direction, they may need some bouncing off on what they're trying to do. And then give them some of those guardrails that will help them, right? I mean, obviously, everybody will not be empowered to take a decision at every level, right? I mean, somebody may be empowered only to take a decision up to 1 crore, but somebody above may be able to take a decision up to 10 crores. Somebody above may be able to take a decision about 100 crores. So if they know what is their freedom and then what are their dimensions into which they to operate, but just empower them, they will build, they will grow, they will have fun, and they will learn. They will do right by others. If you do right by them, they will do right by others as well, and then things will grow and everything will fall into place. Yeah, yeah.
Do you hire for functional expertise or learning agility?
Both. Both. You can't claim to be an expert unless there's nobody is an expert. You have to continuously learn in life. So I look for agility all the time. I look for learnability and intent, actually, more than anything else. And depending on the seniority and the position, how much of expertise we look for also matters. Like sometimes when somebody very, very young, the expertise is less important. It's the ability to learn, which is a lot more important. But when you're coming into a role with a lot of responsibility, sometimes you need to be able to tell others or teach others in terms of what there's. You need to come with certain amount of expertise. So it comes down to the individuals, but we need to look for both. Yeah. Yeah.
Awesome. Thank you so much for
Yeah.
your time, Anil. It was a real pleasure.
No. Thanks, Akshay. It was lovely talking to you. Thanks for all the insightful questions, and is quite an enjoyable conversation. Thanks for having me.